It's Friday, which means a fresh market review. First, the check against last week. Last time the takeaway was direction down, trade short, don't catch the bottom, and the drop continued. Bitcoin broke 60,000 and dipped to 59.5. Ethereum slid lower too. Both shorts worked, but today, for the first time in a month, I'm going to say it. It's time to ease off the short. And here's why. Today I'll show you something I rarely show, how a chop is born, not a trend. The kind of sideways grind where the market maker finishes off the last people still betting on the drop continuing. If you ever wanted to see what getting herded into a chop looks like from the inside, this is exactly the case. Quick one for new viewers on timing. I work on BIOS time. The week closes Wednesday because that's where the scheduled Fed decisions and the peak of Tuesday to Thursday institutional flow all line up. Wednesday's the climax, Thursday's the reaction, Friday's when you take stock. The meeting itself was last Wednesday, and the market is still digesting its hawkish signal against a strong dollar and a sell-off in the tech sector. Today's Friday, let's wrap up. On to the market. And the first thing to catch is this: the drop is starting to run out of breath, and you see it not in price but in reach. On the weekly chart, structure is still falling. But watch. A DP didn't break its previous local bottom, it's holding. And trend dominance didn't push much deeper than 10% and didn't settle on the floor even with a slight tilt upward. That's the hint I'll unpack at the end. The 5-day chart is more interesting. A DP stayed at its local bottom point, but trend dominance didn't break its bottom and didn't even test it, stayed higher. That's a divergence. Deviation is at the bottom, reach already isn't. The 3-day chart shows the same divergence even more clearly. We're holding a zone that gets tested a lot, didn't go below the local bottom. Trend dominance tilting up, and it didn't fall under 10%. It didn't settle on the floor. The daily chart, falling structure. The divergence here isn't as pronounced, but the shape of trend dominance already looks more like the start of an upward move. The 12-hour chart, clean hold below zero line the whole way since May, not a single move up allowed on ADP. But trend dominance hasn't once dropped below 10% since the start of June. They just didn't let it down there. It's holding on the line, which means we're not breaking lower yet. The 4-hour chart, structure below zero with elements of a sideways range, and here trend dominance shows the start of a local upward move even more clearly. Let me stress, this isn't confirmed yet, it's only the start. And the 2-hour chart gave a clean structure for a trade on the false breakout, held below zero, false breakout with a trend dominance test. But the local lows aren't breaking, the picture's now rising. Now, Bitcoin separately. On the weekly chart, we're continuing the downward move, but we didn't drop under the zone that gets tested a lot. We stayed at the minus 25% mark on ADP, and we're holding for now. The 5-day chart, current local bottom didn't break. We stayed above it, so we're not continuing down here yet. Watching. The 3-day chart, same picture, holding the zone, bottom didn't break, slowed at its support. The daily chart, falling structure on a zone that gets tested a lot, haven't broken it yet, waiting for a reaction. The 12-hour chart is holding on the often tested support, not going lower for now. The problem would be a break of the minus 8% mark, then we drop below the June bottom. Now the 4-hour chart, with a very important hint. The highs are dropping, but the lows stopped breaking and started rising. That looks like a coiling spring, the classic triangle. But we don't use classic patterns as a tool, their follow-through is questionable. What matters to us isn't the name of the shape, it's what's inside. Pressure is compressing. The 2-hour chart, held clean below zero, didn't let it up by a hair. And if you line it up with the whole market, this looks a lot like shaking out the last weak hands. So there's no setup this week, and that's a deliberate decision, not a lack of ideas. The picture, in the standard sense, is completely unclear. Continuing to short here is flat out dangerous. The daily and 12-hour charts clearly show they're not letting us down. Looks like the active drop is ending, and the last weak hands are getting shaken out. And on the 4 and 2 hour charts, the structure is already starting to shape into an uptrend. What that means in practice? Right now, we're watching the daily and 12-hour charts. They sit right in the middle of the whole analysis. If the 2-hour and 4-hour charts keep dominating below zero, the higher ones keep dropping, and then you can trade short on tests of the zero line on the 2 and 4-hour charts. But if there's a lock above zero, the same kind we saw in May when the chart stood above zero and held for half a month, then you can trade long, but with the caveat early, because a hold on the mid-time frames will pull the higher ones up with it. In both cases, the 2-hour and 4-hour charts tell you first, as they're more sensitive. And now about the chop, that hint from the weekly chart. Catching the bottom with your bare hands, no tools, is exactly what the market makers are waiting for. They need to gather liquidity with a chop, shake out the last tourist, and then without the extra weight, flip the move up. After flushes like the last few days, the market rarely breaks up quickly. More often it chops in a range, taking out the liquidity of early passengers on both sides. If you were curious to see how the herding into a chop happens, you're watching it right now. That's it for the week. Platforms in the description, indicators and signals available to anyone, free. See you next Friday.